Welcome to our November 2022 stats with Murdock Manwaring Company. We are very festive today, so great to see everybody. Let's get started. We're going to tear through these. We have a lot of stats to cover today, so hang with us and you're going to see a bunch of different stuff. So we're going to go an overview of the basic stats of Southeast Idaho, which is Bonneville, Bingham, Jefferson counties, and then we're going to do a snapshot, just some of the highlights of a few things during the month. Then we're going to go over what the inventory is. Then we've got a bunch of national stats. We just had a bunch of information come our way, so we wanted to share that. And then we're going to see a little bit on the information about, should I withdraw my home and put it back on the market and sell it later, and will that benefit me? So let's rock and roll, Jeremy.
And we're going to talk very fast, so pause it, and you can watch the slide, but we're going to fire hose this. So
let's do it. And it's interesting because I feel like we're finally... the national stats are applicable to our local market in a way. We've always been lagging behind, and our price has been way lower, but let's get right into how we fit in and what's going on. So let's get to the first stat that talks about how many homes were sold compared in 2022 compared to 2021. All the way to November, year to date, or in the month of November, excuse me, we only saw 162 homes sell. Last year in this month, we had 270. So the decrease is a large percentage. And I think I tried, there we go, 40% decrease. So we are seeing what everyone is feeling in the numbers, where there is a slowdown in the number of houses that are selling. Here's a breakdown of month year over year, exactly what's been happening. And you look in January of 2022, we had 203, which was more than 2021. And then we started to decrease, rates changed, and it changed a lot. So now we're seeing a lot less homes sell. This graph here, look at the blue line on the bottom, that's 2022. And closed by month, that 2020 number, man, we spiked in August and September. Rates were clear down below 3%. Now rates are higher. We're seeing a real slowdown in the number of transactions because affordability is really playing hard into the market. Here's a price point for each of the number of sales that we're seeing. Above 500,000 right now is way more than it was. It was almost 50-50 earlier in the year, where we had the number of transactions above 500, but I think rates have played a big part of that. So 132 sold under 500,000, and only 28 up to 1 million. So we're seeing the price
80% really, of all sales under 500,000 right now for November.
Look at that. We actually had one at 88,000. We weren't even below 200 a while ago, and we had 7 under 200, 8 including that 88,000. So,
and do you remember we talked a lot about this last year, that all of those homes that we had above the 500, we kept saying, they're not supposed to be there. They're not supposed to be there. They're not supposed to be there. So we're seeing it. They're finally coming in check.
That's a good point, Nicole. That's here's a snapshot of average cost per square foot. So in July 22, we're at 175. In November 22, 170. October was 166. But look at 2021. So prices per square foot haven't really gone down necessarily year over year, but we are seeing that there's a softening, and who knows, we could be seeing it actually go down to that 2021 mark. We don't want to see that because people could get upside down on homes, but we are seeing that change quite a bit. Here's the year to date. We saw the November to November, but the year to date, we are down 23.19 for this year, a 15% decrease from last year. So not a complete upside down in the market, but we are seeing that things are changing. Lots more homes staying on the market longer and less homes selling, and a lot of people deciding not to sell. Average price, look at this one. This is an interesting one, and Nicole kind of pointed that out, that some of the upper end stuff over 500, I think, is playing into this number, because our average price is $389. compared to 413 last year, which is a 6% decrease. Doesn't mean that your house is less worth less money, just means the average has gone down. So hopefully we'll see a lot more starter homes coming in and lower price range homes that affordability can kind of return, and we can get more people into homes. Jumping around here, let's look at a snapshot of the sold average. You can see this is up until the rate change, right? Jessica, why don't you explain this one? Because I know we reviewed it, but I want to make sure we say it right.
Yeah, so this one just kind of shows how are we doing on the prices. So as we look at this, when we hit that rate change, which happened in April, we started to see that average price reduced down. Then we came up. So we went up 8.9 from the beginning of the year when we got to April. And then when you went from May all the way to September, it brought us back down 9.6%. And we're going to finish the year at down 6.2% from January, which is, we'll see this over time, the peak of our pricing market. So it isn't over year last year. It was, if you bought in January versus now, you might feel like you've lost some value only because January was the peak.
Can I say something on that?
Yeah, go.
Can you hear me okay?
Yeah.
So I've been talking to our clients and telling them that when they're asking if the market is down or they just have general real estate questions, that we're not in a down market. It's just, you're not going to sell, your home for, or buy homes for the same top dollar that was, they were getting purchased for you last year. And so real estate is a long-term game. And so unless you're planning on selling in the next year or two, if you're planning on holding on it longer than that, then you're going to be in good shape. We always recommend, no matter what the market is, that you hold on to your real estate regardless. And right now is a great, time to do that. So, but we're not in a down market. It's just, they're not selling for what they sold the last year or two. But people who bought a house 5 years ago, are they pretty happy on where they're sitting at equity wise, even though they can't sell it for, what they were maybe selling it for earlier this year and last year? They're pretty happy. They're pretty happy with their equity. Yeah.
Yeah, real estate's not the crypto market. We're not the stock exchange. If you look at it daily, you could get, it's just not what it is. So long-term game, look at this. This is thanks to the beginning of the year where we had such a big bump when rates were lower. I think this held us pretty steady because the average price year to date has gone up 14% this year. And so we're still actually seeing an increase in values, but it's just not the bidding wars that we saw. Lots of buyers now have more time to get out and look at a house and maybe sleep on it overnight, right? And so hopefully we'll see a lot less buyer seller fall out of contract as well, because that has been increasing. Original list is sold last year we were at 98%. This year 93%. So that means that if I had a house for sale for 100,000 last year, I could expect 98,000. This year, if I listed 100, I can probably only expect 93,000 because we're seeing a lot of sellers continue to price higher than the market is willing to bear, and so we're seeing some price reductions, some seller concessions towards buyer closing costs and down payments, that type of thing, and time on market. So we're just seeing a lot of shift there. So good for buyers, still good for sellers.
Yeah, if you're listed at where you're supposed to be for the market, you're not going to get 93%. And so
sellers are still hoping to get more. Sellers still think if they price higher, they'll get more. But that slide shows you don't.
That's right. So here's the year to date. Well, last year we were 101.2, and now we're at 97.3. So it's a 4% decrease. So sellers getting a little more smarter. I think that over time we're going to really see some good pricing. That there's realistic things will sell quicker. We won't see such long days on the market because there is still buyer activity, and there are buyers that do qualify. We did get priced out a lot of buyers with the rates, but there's still some good opportunity out there for both buyer and seller.
The rates are not sitting that bad right now.
Ashley.
The rates are not sitting that bad right now.
Right.
My buyer just locked in a 5.9 this morning.
Yeah. And
really not that
there's
bad.
opportunities for buy downs, right? And some adjustable rate where you're fixed for 5, 7, 10 years. If you're not going to be here for more than 7 years, let's say, you get into a different type of a mortgage that's only fixed for 7, you get quite a break on rate and helps it be more affordable. So
That's right.
Chad, you on days on market, I think.
Okay, so average days on market for 2021, we were sitting at 30 days, and we are now up to 51 days. Another reflection of more properties on the market, and we are seeing a 70% increase on how long it takes to sell a house. And again, that's average, right? So as far as average days on market year to date, we are, and that was November to November. And so we're basically seeing now year to date, we're up 10 days from 21 to 31 days on the market. And so, but that's still huge. That's 47%. And I think we'll continue to see that number go up. So to give you some perspective, we're getting closer, to what it was like just a few years ago. We forget those were all good numbers just a few years ago. So.
Yeah,
The
and
last
that's
2 years was abnormal.
right. The
Abnormal.
last
This is
couple
a
years were
normal,
abnormal.
stable market, and you're better buying in a stable market as well.
Yeah.
Yep.
And we're going to see
Jess,
that.
you
as we
want
move
to
into
you want to
national
take this
sales.
one? We'll let you
Yeah.
take this one, Jess.
So this
Before
one here,
Jessica
we're talking
runs-
about overpricing. Are we overpriced on this in this market, or are we not overpriced? And so this gives us a really good idea. As I meet with listings a lot, this is what we really talk about. If we take an average home here in Southeast Idaho, which is anywhere from 2,400 to 3,000 square feet, they have 2 or 3 car garage, a quarter of an acre to half an acre with at least 2 bathrooms. That's an average home in Southeast Idaho. When you're looking at what did they sell for in November, they sold for about, on average, $143 per square foot. And there were 16 homes sold in this criteria. Now, if you take a look at that, where are we looking at? Well, what are they pending at? Which means what is the most recent? And we don't know what they sell for, but what did they have to get their price to get an offer? That puts us at $147 per square foot. And there were 26 homes as of today in this pending in this criteria. So they are taking the price down to 147, but they're probably going to still, when they actually sell, they might come down a little bit more like 143. But what's really indicative of how sellers are thinking is what are the actives? What are the homes doing that are not sold? So the same criteria, same home is sitting active, unsold on the market at $150 per square foot. And there are 71 of those out on the market. So what this really talks about is, are we overpriced? Well, based on this, we're about $6.58 overpriced, which is around $17,700. So those homes that are sitting out there hoping for higher money, you can see from the actual stats, you're going to have to come down and meet the market. And if you're sitting at 150, you should be more at 147 to get a buyer, and you're probably going to close at 143.
Yeah.
I think
So
that correlates directly to the days on the market. Is people are expecting to just put their house on the market and it sells. And so they're hoping. And they're like, well, it's been 30 days. Now we got to drop our price and we got another 30 days. So I think those two go hand in hand. Is we haven't quite got our sellers educated enough to know if you want to sell it in less than 60 days, you're probably going to have to price it at 143 instead of 150.
Yep. What we've always said is you're one of 2 homes, the one that sells or the one that helps the other one sell. And so if you're sitting there around that 150 range, or if you're sitting there not getting activity, but other ones are selling, well, more than likely it's just about price, and you're helping the other one sell. So
That's right. That's right.
Okay.
And last month, I think the sellers are getting better, because last month we were about $9 overpriced, and we're now down to $658. So that's looking really good. So let's get to our next section, and let's just take a snapshot of this month, and let's take a look at what were the actual kind of highlights of this. 174 homes came on the market, which is down 35% of new listings over last month. Our average list price of those homes that came on the market were $445, and if they sold after they came on the market this month, they were selling about $389. The original list to price, if they're still sitting on the market, they're sitting about 98% of what they started with. If they sold, this is what's interesting, they sold at 99.35% of that price. So if you priced it correctly, you came on the market in November and sold in November, 99.35. Those are the ones priced right. The ones that are sitting still unsold are already down to 98%. So that's a really good stat on you will sell at a higher price if you price right from the beginning.
It does hurt to start too high. Well, what does it hurt? If we just put it up there, if we can drop it at any time, it definitely hurts you for your equity.
Yep. And we did see 154 homes went pending, which means the seller and the buyer came to an agreement and went under contract, and it's a pending sale. Of those, 29 of those fell apart in November, 18%, which is great. We were at 35% last month. So I'm feeling a lot better at that 18.8% of deals fell apart. That's a little more normal, but we'd love to, of course, see that go down. We had 70 homes withdraw from the market, which means they just said, hey, you know what? I'm not going to sell. Their average days on market of those withdrawn homes were 88 days. They sat for 88 days and said, listen, I'm not coming down anymore. I'm coming off the market. And their average price per square foot were $177. And they were at 96% from when they started, when they withdrew. So they came down 4% and said, I'm not coming anymore. I'm taking it off the market. We also had homes expire, which means that they listed with an agent and they waited long enough that the listing agreement expired and they did not renew that. So there's 36 homes expired and their average days on market were 129 days. So that's a really interesting stat that they're just like, you know, I'm not going to relist. Average price per square foot, 187. Think of what the ones that withdrew, they were at 170. What are they selling at? We're seeing those prices. And they were at 95% when they finally withdrew, which is interesting because we're seeing on average 93% were homes that sold that had to come down in price, but these guys gave up at 95%. So really interesting. All right, let's talk about current inventory.
One thing important going back on that, the fallout rate, we saw over 30%, and now we're at 18%. Our fallout rate of our team has been well under 10% the whole time. And so there's a lot of reasons why homes fall apart, but they shouldn't. I mean, again, you're never going to have perfect transactions all the time. They will happen, but they shouldn't be happening 20, 30%. I mean, that's just, there's some definite things that can be done to avoid that. So that's a very unfortunate unfortunate statistic because of what, Ashley?
Deals fell through because of not enough communications and not enough expectations set.
Yeah.
And so don't run out to see a house with a realtor. Don't, throw your house on the market without having a significant business conversation with them before you're doing any actual real estate activity, so that you can find out what it is that you need to know so that your deal doesn't fall apart.
Because it isn't about getting an offer, it's about closing. That's the whole thing.
None of
It's
it
not
matters.
about
All of it's
listing,
paper,
selling and getting the
right?
closing.
Paper.
Yeah, it's not about listing your house, it's about closing on your house.
Yep.
Exactly right. Okay, let's keep going. Let's take a look right here at what the current market looks like. We were at 551 homes on the market as of yesterday. That was down from last month at this time, down almost 12%, which we see in the winter. The discretionary seller that doesn't have to sell, that doesn't want to move in the winter, we have less homes on the market, but that increases competition. So it's a good time to sell in the winter because there's less competition. Right now, homes sitting on the market are averaging 79 days on market. Their original list price to what they're currently sitting at on average is 94.9. So right now, homes on the market that have been sitting for those 80 days on average are about 95%, and they're still sitting at that $180 per square foot. We have 3.4 months of inventory. So what this means is if we don't have any more homes come on the market and we sell at the rate of what we sold last month, we'd be out of houses in 3.4 months. A balanced market is anywhere from 4 to 6 months. That gets to where a seller doesn't have an advantage and a buyer doesn't have an advantage. But I think a lot of sellers don't realize we are still in a seller's market. That is an indication we are still in a seller's market, even though it doesn't feel like that. So really interesting. Let's take a look at a breakdown of what the inventory right now looks at. Now, if you take a look at the ratios of what is selling versus what's sitting, that is really interesting. We have 349 homes sitting on the market under $500,000. The majority of our homes that sell are under $500,000. So they're sitting out there. You've got 176 from $500,000 up to $1 million. So a lot of homes, look at those average days on market sitting over there at our higher end homes. They're feeling the pinch right now. If you get above $1 million, you've got 26 homes available to you, and look at those average days on market. So they're sitting, and this is really indicative of what happens when we shift in a market. The higher end homes really see a slowdown. So let's keep moving. What do we have currently for pending? So how many homes do we have under contract right at this time? We have 226 homes that are under contract. The average price, $434, and the original to current price, which means what was the price that got them an offer? 93.6. 93.6 on all those pendings. Average price per square foot, 167. The ones sitting on the market, what were they? 180 per square foot. The ones under contract on average, 167. Average days on market, 67. So we're going to take a look. We've got quite a few slides here coming up. Some national stats. Chad, you want to pick up that ball and walk us through these national stats?
You got it. All right. Let's move on to national stats.
Oh, I think you can move those slides if you'd like, Chad.
Perfect. Excellent. All right. So basically this one is showing where the mortgage rates have been. And if you watch this curve, I mean, it's just interesting to see where it's gone. But I mean, we definitely have seen a huge spike. Rates are up. If you look at kind of how this has been since 2015, you know, we are moving in rates. And in November, 7.1, we're actually down closer to 6. As Ashley said, we're seeing some even in the high 5s. So mortgage applications versus mortgage rates. This one's interesting. Look at the spread between mortgage rates and mortgage applications. As rates go up, applications are going down. You ask anybody in the mortgage industry, they've felt this, and it is just a huge divide right now. So maybe getting a little better right now, but it's been a tough one for the mortgage industry for sure. Okay, so we just had Lawrence Yun is the chief economist for the National Association of Realtors, and he just gave his economic summit earlier this week, and these are his predictions of the mortgage rate forecast. As you can see in the blue, this is where we have been and where we're going. He's predicting that, and actually we've already seen this. I mean, we've already seen first quarters now actually right on that 6 mark, and he believes we're going to be hovering right in the 5, somewhere in the 5s throughout 2023. I've heard some people say, hey, you know, we're going to be back in the 3s. We know we're going to be back in the 4s. I'm like, I've never heard that. I've never heard anybody predict that we're going to be in the 3s or even the 4s. So I'm not planning on that myself. So that'd be a great bonus. And we know when that happens, it'll be a huge refi boom. Here's kind of a breakdown of home sales. We can kind of see this curve. We were down 1.5 million sales from 06 and 07. We never regained those sales. And now we're projecting another $1.2 million sales. That basically homes that weren't built and sales that never happened based on our average. So yeah, we're down on that. And this one is a great stat. We've been wanting to do this one for a long time. So good job, Jess, and good job, Anthony, for putting these together for us. But we have home sales in Southeast Idaho over the years. We have, you know, you can just kind of see on average, in 99, we were doing 1,300 a year. And then it went up to 2,554. Then it kind of crashed down to 1,462 in 2011. Then in 2020, ironically, when half the world was shut down, that was our biggest year ever. We ended up with 3,230 sales. And now year to date, we're just, you know, around the 2,300 mark, and we'll end the year, you know, under 2,500 more than likely. So anyway, definitely a down year. But this kind of shows you the trend. And home sales monthly, this is at a national basis. We can see that in 2022, this is a stat that we had from August, so we haven't updated it from September and October and November yet. But you can kind of just see overall, we are definitely seeing a decrease in sales in 2022. Home sales in the Idaho Falls area over the last 20 years. This one actually is just over the last 3 years, but you can kind of see the cyclicalness or the seasonality of our market from January, and then the spring spike, July, and then back down to December, January, and then up and down. Our market pretty much has a pretty good seasonality to it. But again, people think that home sales, that nobody buys or sells in December. Not true. Nobody buys in January. Not true. We still have, you know, hundreds of homes that sell during that time period, but we definitely see a spike in July, in the summer months and spring months. Okay, existing home sales monthly on a national basis. Basically, we're seeing some of the same spike, you know, as you kind of look. Maybe not the same seasonality, but the most important part is look how home sales have gone down in 2022 on a national basis. I mean, we're going from 6 million all the way down to 4.5 million. So definitely seeing some decreases in sales. All right, this one's a really big one, and this one we're sharing a lot with people because a lot of people right now are saying, hey, I don't really like, the market right now. Let me just rent my home for a year and let's see where things are next year. That's okay. Do whatever you want to do, but we want you to be realistic. This yellow line is showing on average, the US has seen an appreciation rate on average of 4% a year. And so at 4%, you would follow this yellow line. We basically went above that starting in 02 through 08. But then if you're thinking of taking your house off the market for a year, look at what happened in 2008. In 2008, it wasn't better in a year. It wasn't better in 2 years. It wasn't better in 3 years. It was starting to improve in 4 years, but you're still way lower than you were before, and then up. And it took basically 6 or 7 years, 10 years to improve where it was back in 2007. And so if you're going to take your home off to rent, just know that you're probably going, and you're doing it to try to save money or get prices back. Know that time frame should be 3 to 5 years. We don't think it's going to be as bad as 2008, where it's 10 years, but plan on 3 to 5 years, I think, to be able to get pricing back is what we're kind of looking at. So any other
Chad,
comments on this one?
What's curious to me in this is that drop. So looking at 2008, what did that low drop? What was that percentage? Did that go from, just kind of, I don't know, just looking at the percentage, if we say, in 2008, it dropped down 15%.
Mm-hmm.
And then to get back up to that 15%, we went to 2016. So 8 years. Well, now if we go from this number, 2022, and we've already seen, didn't you say we've got a 15% drop?
Mm-hmm.
In that. So if we have the exact same curve, then that's about 8 years. Yeah. So it would be interesting to see what that percentage drop was right there between, from 8 down to 11.
Well, the percentage drop from 222 from 06 to 11 at 166 is 25%. To put that in perspective.
There you go. 25%.
And so if I remember right, on our local numbers, the biggest drop we saw in a year was about 11%. I think we've already exceeded that in our market this year. But the big difference is right now people have equity. People have more cash than they had in 2008. I don't think it's going to be as bad. We're trying to basically get our inflation number back down. So I don't think it's going to be as bad, but we're going to hit probably the same reduction, if not more, than 2008 in sales. Okay, moving on to the next slide. Average price of home over the last 20 years. This one's one we've been wanting to get for a long time. Look at the curve at 4%. This is where appreciation rates should be as we follow this green line going up. We basically were below it, and then we went above it in 07 a little bit. Then we've been down below it. And then in 2019, only 3 years ago, we went over it. And then we eclipsed it, and then eclipsed it, and eclipsed it. So, the last 3 years have been crazy for pricing. We're way over where a 4% annual appreciation rate is. So, we'll see where that goes. I don't think we're going to see it go down back to the 4% appreciation. We're going to have this 3-year adjustment, but I don't think we're going to start a new basis line on the 4%.
So I think, Chad, what I've heard a lot of people talking about also in this, Idaho Falls, we went up so high, we've got to have some normalization if we're going to maintain a good. So when people are feeling from January back down to normalization, we've got a lot of room to move based on where we started from. So it feels a little bit rockier for us just because you can see that spike was so high in Southeast Idaho.
My point though is I don't think we're going to go back to, we should be around 250 based on 4%. I don't think we're going to ever go back to the 250. We're going to start a new basis line. We're probably going to be around 350 and then start from there again. So we're just going to have a crazy bump where we kind of caught up to other markets. So
if you look at 2019 and you say, hey, I bought my house for $250,000 in 2019 and just good real estate. Just a good real estate. We know that good real estate's always been good. In 2019, 250. If your house went up to 275, that is what people were used to having real estate investments. They're like, that's what I made in 3 years. And so this huge bump has really skewed it that people are really worried and really freaking out, and they shouldn't. You should just be like $25,000 over 2 years. That's good real estate investing.
Yeah. Well, and a lot of luck too, because you couldn't time this. I mean, there's a lot of luck here. I mean, you probably would never pick a market and have this happen again. I mean, it's just, there's a lot of luck involved. The bottom line, if you want to avoid luck in real estate, buy it and keep it long term, then you're going to be fine, because real estate's a long-term investment. Home prices monthly, this is kind of here. You can kind of see where that's kind of been with interest rates, and you can see as rates have gone up, we've also seen home prices start to move down in that latter part. It took a little while to connect, but because this is reporting closings, and so it takes a while to be able to catch up. Okay, average price of home in Idaho Falls over the last 36 months, you can see it's obviously been increasing. Stereotypical home of 25 to 3,000 square feet. The average home that's selling, you can kind of see the same thing. It's been appreciating. It's been a great investment. Anybody who bought in 2014 on, and if they still have it, it's a great investment. Lucky investment. You took advantage of some real estate luck. Okay. Lastly, the last thing we want to cover is, what if I withdrew my home early in the year and I didn't basically take advantage of the prices then? And what happened? We've had a lot of people, what kind of happened a lot in the spring is people would list their house, they weren't willing to accept the market price in the spring, and they wouldn't drop their price, and their realtor was saying, hey, drop your price, drop your price. They're like, no, there must be something wrong. They withdrew their house with their agent, relisted with another agent, and then realized, oh, okay, maybe it's not the agent, maybe it's the market. Let's see where we need to go. What we found is the people that went on the market in the spring, then withdrew, and then eventually went back on the market and sold, on average, their houses sold for 15.6% less than what they started out at. Okay. And so, and that's average. We'll go into some of the details roughly. I mean, basically, if you see here some examples, one that went for, start at 405, sold for 368, and down 8.6, down 17.3, down 13.8, and just that's kind of what happened. The reason why we share these slides is it's very important. Ashley alluded to this earlier, and that is, it's way better to price it right at the beginning. Find out where the market is now, and then get the price, because they could have taken advantage of much higher prices if they would have taken advantage and found market price versus waiting so long to get the real price. So,
and when you meet with your realtor, hopefully us, you're going to be presented, with all those numbers. If you're, meeting and not seeing these numbers and being shown proof where your numbers should be, it's risky. Well, they're telling you to list, higher or lower where you think you should be. No matter what you guys are talking about, you should be looking at the exact same stats that we're looking at for your local, market and price range for right now, for the last few weeks.
And if someone's saying, where do you want to list? And they're asking you where you want to list, instead of telling you where your house fits into the market, that's a pretty big red flag. You definitely need to have a really good idea where the market is, where your home fits in. How do you fit with the current homes on the market? How do you fit with the ones that are selling? And you need to have an agent educate you on the market, because it's all about the market. The market doesn't care what you think it's worth, what I think it's worth. Their market has a price, and you have to be able to find that price, and you're going to find it one way or another, but you might as well find it sooner than later, because we are seeing, prices continue to go down, and we will continue to see them go down. So
I think if we're going to wrap up and give a final thought, if you are thinking about selling your home in the next couple of years, it's probably the best time right now, and rates are coming down. So if you've been on the fence, it's time to get in here and talk to one of our agents and start looking at some homes, because it's a great time.
And Dave Ramsey just said the other day, he said, hey, yeah, we're in a crazy market, but it's still the time to buy. Yeah, we're probably going to see the market go down a little bit, but you're buying long term. If you can afford it now, get in there with the rate that we have today. Don't try to time the market on a lower rate. Get in what you can. If it goes lower, then refinance. But it's always better to own real estate than to try to time it. You just can't. And so it still is a great time to sell. Way better to sell last year over now. but it's probably going to be better to sell now versus next year. But you sell when you need to sell, and it's going to work out. And you buy when you can buy. It's better to be on the market, and we'd love to help you do that.
And you don't have to be decided when you call. The whole point is to call us for information to help you make that decision.
Because with good information, Ashley, what?
You can make good decisions.
Make a
That's
good
all about.
decision.
Yeah.
All right, well, that is the stats. Thanks everybody for joining us. Next month will be the year end and we'll cover the whole year. All right.
Yep.
Thanks everybody.
Merry Christmas.
Merry Christmas.